Okay, welcome back to another video. In this video I'm going to be breaking down how I trade gold using my strategy, which is a bit different than how I trade in regular currency pairs. For example, for my regular currency pairs, I normally look at the previous days. Like I normally look at the previous day and how the previous day went. So if the previous day went up, I look for a buy, and if the previous day went down, I look for a sell. But for gold trades now, I use these EMAs, which is the 200 EMA and the 50 EMA. So whenever the 200 EMA, which is the red one, is over the 50 EMA, which is the green, I look for a sell, and vice versa. And actually, that reminds me, everyone here is interested in trading, whether it's trading stocks or Forex. So hear me out. If you're looking to start trading or already trading with little to no success, you should remember to trade with a regulated broker. They are bound by the law to offer complete transparency, so you know what's happening to your money. They also give risk warnings and fraud protection. To make your search easier, I linked a regulated broker down in the description that even gives a $30 trading bonus once you sign up. It will be the first link in the description. Okay. And everything else is the same. I look for the same setups, the normal buying setups, the advanced buying setups, the normal sell setups, the advanced sell setups, the normal reverse sell setups, the normal reverse buy setups, and etc. And the other difference is that instead of using 30 pips as my stop loss, I use 50 pips for trading gold, just because gold is a bit more volatile than regular currency pairs. So I need a bigger stop loss. So in this video I'm going to be breaking down how I trade. Not really how I trade, I already have videos on how I trade. We're going to be breaking down trade setups from the 9th of May 2022 up to current day, which is the 27th of May 2022. Okay, so starting off, as you can see here on May 9th, the 200 EMA is over the 50 EMA, so I'm looking for a sell. And following my strategy, I either look for a normal buy setup, a normal sell setup, which did not happen here, which would have been if price went up above the Asian box, then came back down for a sell, or an advanced selling setup, which almost happened here. If you look closely, this is the Asian box. Price went kind of below it, then went up, and then came down. But this did not come anywhere close to the middle of the Asian box, which middle of the Asian box would have been all the way up here. And as you can see, this did not come anywhere close to that. So on this day, we would have had no trade. So let's mark that down as no trade. No trade. So moving on to the next day, which is May 10th, 2022. Let's draw the Asian session box for clarity. And as you can see, price went above the Asian box with this very small wick. Let's go this for a while. With this very small wick right here. See? This very small wick. It broke out above the Asian session box and then came down for a normal sell setup. And for normal selling setups or normal buying setups, we'll look at the MACD for our entry. So our entry would have been at the very first red bar on the histogram right here. So right here was our entry, and a 500 pip stop loss, which would have left us right above the Asian box. And as you can see, this trade went all the way down, as in all the way down for, let's try and see, trade went all the way down all the way down for a 1 to 14 risk to reward ratio, and 1 to 14. Which was 740 pips of profit. That's at the very low, but let's be realistic here. We would not have held the trades for so long. We'll have probably held it for at least this, which is 500 pips. So let's mark this trade down as 500 pips. Okay, so the next day now, we come into the market looking for a sell again, because the 200 EMA is still over the 500 EMA. So we come in looking for a sell and setup. We kind of got one right here. Let's draw out the Asian box. And as you can see, we had a normal selling setup because price went above the Asian box right here, then came down for an entry somewhere along here. So let's see how many pips that was. Using our MACD as our entry, we'll have entered right here on this very small red bar on the histogram, which came right here on this bullish candlestick. Give ourselves a 500 pip stop loss. Yep. Price went all the way down for 181 pips profit. So let's mark that down. Okay, now we come in on the next day now. Show out the Asian box. And we're still looking for sells because there weren't any crossovers here. So we're still looking for a sell. And we got one. We got an advanced selling setup right here. If you look closely, you can see the price dropped below our Asian session box. Let's draw the middle of the Asian session box. Then price came up from below here up to the middle of the Asian session box right here before bouncing off and dropping for many pips. So let's see how many pips that was. Okay, so our entry would have been after the very first bearish candlestick after the bounce of the middle of the Asian box. So our entry would have been sharp position. Entry would have been right here on this bearish engulfing candlestick right here. Give us about 500 pip stop loss, which is over or above the middle of the Asian session box, so we know it's a valid trade. And price went all the way down here for 627 pips. $621 pips profit. Oh, and by the way, on a normal month, on a regular month, I normally pull up to 2,000 pips profit. Sometimes 1,000, but mostly 2,000 pips profit just off gold alone, and then another 1,000 plus pips profit off of the other currency pairs. Sometimes 3,000 pips of the other currency pairs, sometimes less, sometimes more. It all depends on what's going on in the world. So on this trade, we've gotten 621 pips profit. So now coming in on May 13th, again, we're looking for sells. So we gotta look for a normal sell setup or an advanced sell setup. And in this case, we got a normal sell setup. Let's draw the Asian box for clarity. Okay, as you can see, price went above, slightly above the Asian box right here before it dropped all the way down here with a normal selling setup. So in this case, just like before, we look at the MACD. But this is I think I mentioned this, I think in my Euro USD video, breakdown video. And in a case like this, where there was not any change from the green bars to the red bars or red bars to the green bars on the histogram of the MACD, we just take the trade after the very first candlestick in the direction we're looking to go. Like for example, in this case, price went above here with this wick, so it will not enter on this bearish candlestick even though it's going in our direction. We'll enter on the next bearish candlestick. If this was a bullish candlestick and then this was a bearish candlestick, or if the bullish candlestick here went above the Asian box and then it give us this candlestick, would have entered on this one right here, this one with a long wick, but it did not go like that. So it would have, so in this case we enter right here on this bearish candlestick right here. I hope we caught that. So we enter right here with a 50 pip stop loss, and our take profit would have been all the way down here for 369 pips profit. And again, this is a 1 to 7 risk to reward. This one up here was a 1 to 12 risk to reward. This one was a 1 to 3 risk to reward. This one up here was a 1 to 10 risk to reward ratio. Okay, let's continue. On this case now, which is the 16th of May 2022, we're still looking for a sell. So we are looking for advanced sell setup or a normal sell setup. And in this case, we got an advanced sell setup. Let's draw out the Asian box for us. Okay. If you look good, you can see the price drop below the Asian box right here. Drop below. Let's draw the middle of the Asian box as well. Okay, so price dropped below and then price came up back almost to the middle of the Asian box, then bounce, then drop for an advanced sell setup. But let's see if it was valid. It will be valid if our stop loss on this trade would have been above the middle of the Asian box. If our stop loss is not above the middle of the Asian box, it's not a valid trade. So let's see if it was a valid trade. We've entered right here on the very first bearish candlestick after the bounce, right here. 50 pip stop loss. Let's see, and it just made the cut. But it actually didn't just made the cut. Put the entry wrong. Okay. But it still just made the cut. 50 pips stop loss. And price went down for 200 pips profit, which is a 1 to 4 risk to reward ratio. And it's a valid trade, by the way. So let's put that down as 200 pips. $200 profit. And if you can see, in just this 3-day period, well over 1,000 pips was made in just 3 days. Well over 1,000 pips, not even including this 500 pip trade over here and this 181 pip trade here. Just 3 days here, over 1,000 pips. Okay, then moving on to the next day. Okay, now we have some buying trades. I mean, okay, if you look good, you can see that there was a crossover between the 200 EMA and the 50 EMA, 200 EMA and 50 EMA. So that means that we're now looking for buys. So let's draw the Asian box. Okay, and as you can see here, we have ourselves an advanced buying setup, because just like I mentioned before, price went up, or I mentioned in previous videos, price went above the Asian session box, then went down to the middle of the Asian session box, bounced off the middle, then it went up for an advanced buying setup. So let's see where we would have entered. Our entry would have came right after this bearish candlestick right here on this bullish candlestick, because we enter on the very first candlestick on for buy advanced buy setup. We enter on our very first bullish candlestick after the bounce. So entry would have been right here, 50 pip stop loss, and our take profit on this trade is 100 pips. This one was 100, which is a 1 to 2 risk to reward ratio. So far we have no losses. So far, let's see. For May the 18th, we're looking for sales because there was a crossover again. So looking for sales. Draw out the Asian session box. And as you can see, we got ourselves a normal sell setup right here. As price went above the Asian session box, then drop for a normal sell setup. We also a short position, and we enter using the MACD. So we enter on the very first red bar on the histogram. So this small one right here, enter right here. We also have a 50 pip stop loss, and price went for 68 pips. Let's mark that down. $68 pips profit. Okay, now we have ourselves here on the 19th of May a reversal buy setup. Okay, let's set out the previous day's low. This is the previous day's low right here. Okay, previous day's low. Let's draw this Asian session box. Okay, as you can see, price dropped. Well, in this case, we're supposed to be looking for sells, because after the end of the Asian session box, the 200 EMA is still over the 50 EMA, but price dropped below the Asian session box and came very close to the previous day's low, like less than 30 pips away from the previous day's low, before going up again for an entry. And just like I mentioned in previous videos, once it comes close to the previous day's high or low, we take it as a reversal trade. And you know, in reversal trades, we look at the MACD for our entries. So let's get a long position out, and we enter on the very first bullish bar, not really bullish, but the very first green bar on the histogram of the MACD. So after this candlestick right here, will be our entry. Give ourselves a 50 pip stop loss, and this trade right here went all the way up all the way up for 500 pips within a 1, 2, 3, within a 3-day period, no, 4-day period. I mean, 500 pips profit. Just mark that down. Which I think is a 1 to 10 risk to reward ratio. Yep, 1 to 10. 500 pips. Okay, now coming in on the 20th of May, we have ourselves another reversal trade right here. So we would have came in the market looking for a buy, because the 50 EMA is over the 200 EMA. So we come into the market looking for a buy. Let's draw up our Asian session box. Okay, as you can see, price went up. Let's draw the previous day's high as well. And as you can see, there's a clear bounce of the previous day's high over here. A clear bounce as price went above the Asian session box, bounce off the previous day's high before it dropped down for an entry. And in this case, we would have been holding this trade right here, even after seeing that price bounce off the previous day's high over here, which indicating a selling setup. So let's get a sharp position out. We use our MACD again, just like I mentioned, for our entries. Let's see if this was a profit. Give us a 500 pip stop loss, and the price went all the way down for 115 pips profit. So let's mark that down. Okay, 115 pips. Moving on to the 23rd of May. Let's draw our Asian session box. Okay. In this case now, we're looking for a buy, but price went above the Asian session box in this case and did not bounce off the previous day's high. Because the previous day's high is all the way down here. So in this case now, since price did not give us a setup, we will not have taken any trades. So this is a no trade day because there were no setups. Okay, coming in on the May 24th, still looking for buys, and as you can see, price, let's try the Asian session box. Yeah, as you can see, okay, as you can see, price went above the Asian session box, then came down very close to the middle of the Asian session box. Let's draw the middle. Oh, wrong thing. Price came very close to the middle of the Asian session box before going up for an advanced buy setup. But let's see if the advanced setup was valid. And again, in order for the trade to be valid, the stop loss needs to drop below the middle of the Asian session box. So let's get this long position. We would have entered at the very first bullish candlestick because it's a advanced buy setup. The very first bullish candlestick after the bounce of the middle of the Asian session box. So we entered right here and give us about 500 pip stop loss. And as you can see, price, our stop loss fell far below the middle of the Asian session box, so it's a valid trade. And the trade went up all the way for 137 pips profit. Just put it down. Okay. We're coming in on the 25th of May. Like the 24th of May, we're looking for buy setup. Let's make things a bit clearer here. Okay. So as you can see, price fell below the Asian session box here before coming up again. And price actually gave us an entry right here on the very first green bar on the MACD histogram. And as you can clearly see, this is a loss. As price continued to go down, even after it came up a bit here. So entry would have been right here. 50 pip stop loss. And price didn't go anywhere. So this is a loss, our very first losing trade. Let's put this down as a loss. Let's put it down as an L. It's an L. Our very first losing trade. Okay, now coming in on May the 26th, we're looking for a sell because the 200 EMA is above the 50 EMA. So we're looking for a sell. So let's see if we get one. Draw out the Asian session box here. Sorry for the dogs in the background. Okay, as you can see, price fell below the Asian session box. So the only setup we can look for right here is an advanced sell setup. And then price came up again. Not sure if this is the middle of the Asian session box. Let's see. The middle would have been somewhere along here. Oh, too long. The middle would have been somewhere along here, which is pretty close to where price reversed. So price came up, then bounced off the middle of the Asian session box, then dropped down again. So our entry would have been on the very first bearish candlestick after the bounce, which is right here on this very small bearish candlestick. Give us a 50 pip stop loss, and price went down for only 44 pips. So this is another losing trade right here. This mark is long as an L. Another losing trade. And then we come in on the 27th of May, and we're looking for a buy. Well, no, actually a sell setup, because in the middle of the Asian session box there was a switch, but since it started off as a sell, we're looking for a sell, which we can just conclude this as a break-even trade, because you can clearly see it. This is a break-even trade. Okay, the next segment is gonna be about the calculation of the win rate and how many pips there was in profit. So now let's calculate the win rate. So in total we took 14 trades, and there was a 1, 3, 4, 5, 6, 7, 8, 9, 10 wins. So out of 14 trades, put the calculator. Okay, so out of 14 trades, 10 of them were winners. So 14. So our win rate on gold is 71.4%. That's our win rate. And to calculate all these pips, I went ahead and do it, and I did it on this side. So after calculating, it came up to over 2,700 pips in profit from all of this. If you want to, you can go and calculate it yourself, but it came to over 2,700 pips. And then after I finished subtracting the losses, which was 2, and both of them are 50 pips, so I subtract 100 pips from it. So the profit for this, the profit for all of these trades is 2,600 pips. Let's put it into perspective. If you're trading and you manage to get 2,600 pips in 2 weeks of trading, and let's say you're trading at 1 standard lot size, that's $10 per pip, which is $26,000 in 2 weeks of trading. But let's be more realistic. If you have a 50 pip stop loss, it's highly unlikely that you're going to be trading at 1 standard lot size. So let's say it's half of 1 standard lot size. That's still $13,000 in 2 weeks. If you want, you can go open your charts and check it out for yourself. But that brings us to the end of the video. Make sure to check out the strategy. I have it posted, I think it's my second Forex video on this channel. You can check it out. And I'm out.